For Creamer Media's Polity, I'm Tabi Shamulikai. Tusker CEO Gareth Ochse joins me to unpack more on BEE ownership. So before we get into your recent research on Black ownership or BEE ownership in South Africa, so can you tell us a bit about your company Tusker, under which the study is published?
Sure. We started Tusker in 2017. And the reason we started it is that both myself and my co-founder, Des Marnie, had worked in BE and solved the BE ownership problem in different spheres. So myself in a private company and in private equity, and then Des had worked in the foundation of a new stock exchange with dealt in restricted shares. So we thought that we had some expertise in dealing with restricted shares and trading with shares that only specific classes of people could own. And we brought that expertise to the market in the form of Tusker. Tusker is an FSP, we category 1 and 2, and we aimed our services at businesses that want to do BE, but for whatever reason can't or don't want to lose ultimate ownership or control. And so we've developed a solution that works similar to the equity equivalent investment programs, where clients can keep ownership and control, but they're required to invest into Black businesses. And we do that via our funds. And it's worked quite well. So in over 8 years, no one's ever left us, and we manage about 1.4 billion rand of Black equity at the moment.
Mhm. And your study challenges the claim that BEE ownership has benefited few Black people. And your findings is that over 870,000 Black people are shareholders in South African companies. So how did you go about establishing this figure of 870,000?
So the important thing about our research is that we think 873,000 is the floor, not the ceiling. We think there's way many more Black shareholders than that as a result of BE. But what happened here is that there's this very popular narrative, and you see it increasingly in the press, especially in the sort of more right-leaning press, that there's 100 Black elite, that only 100 people have really benefited from BE, etc. And being in the market, offering ownership solutions to companies, we didn't see that same pattern. Obviously, we know big names with a lot of money, but we saw a lot of companies doing deals, and there's Black people that are becoming very wealthy out of these shares, and we just decided to do our own research. We couldn't see that anyone else had researched this. So what's happened in our business over the last 8 years is we've built up a database of, it started off being close to 80,000 companies, but once we cleaned it up, deduplicated it, cleaned it up, we've got a very solid, trustworthy database of about 54,000 companies in South Africa for which we know their BEE status. So these are companies that have filed affidavits, but most of them are actually verified. And of those 54,000 companies, 27,800 have some form of BE ownership on their scorecards. So these guys have 100% at one level and down to a few percent at the others. And they're across all the different industry sectors, and they're across the sort of three size categories of BE. So we now know that there's 27,800 companies that we absolutely know of that have BE ownership. We've ignored everyone else because obviously we don't know the whole market, but we wanted to figure out what sort of share of market are we talking about. So what we then did is we took our database, the number of companies each size, and we compared that to SARS's VAT reporting. So SARS produces a report every year on the different amount of VAT that they receive by size category of the business, by the reportable turnover. And we were able to look at that, and across those three size categories, on average, we got about 45% of the VAT returns matched to our database. So it's a very representative sample. So we now know that we've got 27,800 companies with Black ownership, and that matches, that's a 45% overlap with SARS's database. Getting to the number of shareholders is a little bit trickier. So what we've had to do is work with the BE size categories, and there's three. So we start with EMEs, the emerging micro enterprises. These are businesses between 0 and 10 million. If you're going to have Black ownership at that level, you've got at least one shareholder. But some of these guys are more. Some of them are 100% Black owned. They've got multiple partners. Others even have employee share option schemes. So we were conservative again. The whole emphasis is we've been trying to be very conservative, and we gave each EME a score of 1.5 shareholders. Then for the next category up, these are qualifying small enterprises. These are businesses between 10 and 50 million rand turnover. So some of them are quite big. They employ a whole bunch of people. Some have got long staff histories where the black staff now have shares in the business. And here we looked around and we decided that 5 shareholders for each QSE that had black shareholding was a conservative number that we would be very confident to back. So that gives us those 2 categories where the bulk of the currents are. It's a little bit harder when you get to the generics. So generics are businesses that turn 50 million rand or more. And here you get businesses that at the one end are 100% black-owned companies that have just got into the generic space. So they're newly 50 million rand turnover. At the other end, you've got businesses that are 40, 50, or even 100 years old that employ 20 or 30,000 people. And a lot of those big companies have done employee share option schemes. So they've got big ESOPs or they've got trusts. And there, if you look at the listed companies and the number of shareholders that they've got in their black shareholding, it's large. So where we ended up with there is we again try to be very conservative and we worked off 75 shareholders per generic. So while it's conceivable that you'd have a generic with 1 black shareholder if it's 100% black owned, the reality is more like several thousand per company in that space, and 75 is very conservative. So if you multiply the number of companies in each size category by the number of shareholders we think each business would have in that size category, you get up to the 873,000. So that's conservative. It's also conservative because we've assumed that anyone that's not in that database of ours at 54,000 companies has zero ownership. And obviously that's not true. We don't know the whole market, but we've just been that conservative. And then we've also excluded any indirect shareholding via pension funds or platforms like Easy Equities, etc., because that's not necessarily directly as a BEE consequence. It's just people investing. And then the informal sector is entirely left out by definition.
And what is the basis of your assertion that 870,000 Black people being shareholders in South Africa is due to the country's BEE policies?
This is one of the most fascinating outcomes. So if you go into any analysis, what I like to do is I like to think before I look at the data, before we put the data into the tools we use to do this kind of statistics, is I try and figure out what I'm expecting to see. And that helps me error check the work as we go through, but also just quite quickly allows me to see whether we're on the right track or not. And if you think of BEE policy, so firstly, BEE is a voluntary thing. You don't have to do BEE in South Africa. There's no law that says everyone has to do BEE. But they do say, and it's very, very cleverly designed legislation, they do say if you want to trade with government, government is going to reward 10% of the points on a tender based on your scorecard, and then the scorecard is made up with these things. So the scorecard has a couple of components. We only do ownership, so we only really focus on ownership, but the procurement scorecard, which is part of the enterprise and supply development, strongly incentivizes businesses to buy from companies that are 51% black owned or 30% black female owned. So there's a couple of things that go on. If you had no BE, I think you'd see a fairly random, non-correlated scattering of ownership, black ownership in the companies across the country. You'd have some black founded businesses that would be 100% black owned, and you'd have some white companies that would remain 100% black owned for generations. And then you'd have people who had, gave their staff some shares and maybe they'd be 10% black owned or something. And that'd be fairly random. You just have like a scattering. What we see is exactly the opposite of that. We see very, very defined nodes in our research. And the first node is that there's a very clear lift at the 25.1% mark. Now, 25.1% black ownership is a target. That's your peak points for your ownership scorecard. Some of the scorecard elements are called priority elements, and if you don't get at least 40% of the scorecard, you get your entire B level discounted by 1 level. Ownership is one of those. And so that sub-minimum of 25.1% is 10%. And so we see a little bit of a lift, like a statistical lift in the distribution at 10%, and we see a big lift at 25%. So that's the effect of the ownership policies, and it's clear as daylight in the report, which you guys have a copy of. And this is the key graph. The second thing we see is that across the board. So at generic level, you see a bulge at 51%. And then especially in the smaller businesses, in the EMEs and the QSEs, you see a lot of companies sitting at 51% and a whole bunch more sitting at 100 as well. And the reason that happens so much, this 51% mark is so key. So firstly, if you are selling to a big corporate customer, they want to buy from a 51% black-owned business. So we see a lot of companies adjusting their ownership to be able to compete in that market. But the second thing is, if you're an EME or a QSE who achieves 51% ownership, then you are automatically given a level 2 status. And that means also that you don't have to spend any money on the rest of the scorecard, and you also don't have to produce a full verification. You can do this by affidavit. So it's a big simplification. And we see this pattern through the economy. Businesses has responded to the black ownership policies of the country and the procurement policies.
And can you also assess whether black shareholders are in possession of operational authority in the firms in which they are shareholders? Also, do you know the total value of the shares that these black shareholders own and whether these shares are free of debt?
It's very hard to do both of those. So the ownership scorecard measures the percentage of shares that are owned by black people. In theory, the net value part of that scorecard would show you whether those shares are free of debt or to what degree they're free of debt. And there's a formula for that. That comes into the percentage points awarded in that scorecard. But we don't see that that full scorecard, but we know what percentage of these guys are. That's the ownership side. How much management control black people have in these businesses is measured separately. It's part of the management control scorecard, which we haven't looked at, and we don't know. So, and then as to whether these shares are free of debt, that comes down to the net value part of the scorecard. But the bottom line is, do we know the total value? No, because it's very hard to value these businesses. If we had to go back and say run a valuation on nearly 30,000 companies, we would need their annual financial statements. We would need to go through the growth of the industry. We would understand their competitive position. And then we would need to look at the T's and C's of each BE deal to understand whether those deals are in the water or not. What we have seen with the big listed companies, Sasol did a scheme a few years ago that they had to unwind because it was underwater. It's easy to finance B deals where the market is going up, the share price is going up faster than the cost of debt. But if the economy stagnates or a particular company has a bad time, these deals go underwater very quickly. So we don't know the answer to that. I'd love to do that analysis, but it would be tens of millions of rands of the work. It would be a really big task.
And you say that in addition to direct black shareholders in South African companies, many black people indirectly own shares in the economy through pension funds. So can you explain what you mean by this?
Any one of us who's got some money allocated to our retirements via a pension fund, those pension fund administrators invest that money into a variety of assets. So some put money into businesses like ours or private equity, but the vast majority goes into the fixed income markets and the listed stocks. And if you think about it, every employer in the country who has staff on some form of pension or provident fund, those funds are investing back in the economy. And let's say you've got any listed company in the country would be owned largely by pension funds. The JSE is very concentrated towards these big pension funds. And a portion of those pension fund beneficiaries are the black people that have invested in for their retirement. So you end up with pretty much anyone who's formally employed in the country or got some form of retirement saving in terms of a unit trust or the equivalent kind of vehicles, a retirement annuity, that money is invested back into the economy, and those people are indirect shareholders of the underlying asset. So there are literally probably 10 million black people who own shares indirectly, but that's not a B ownership result. That's just an investing result.
And do you have any suggestions as to how South Africa's PEE policies could be improved to uplift and include more Black South Africans and boost growth and jobs in the economy?
This is a never-ending debate. I think the BEE policy is very well intended. Like we have this need to address 30 years after apartheid, we still have a very inequitable economy. We're still grappling with these issues. The fundamental thing, though, is BEE is being tainted by corruption. So corrupt people will find any form of avenue, any form of legislation to play with. But unfortunately, what happens is you have a corrupt semi-mafia state starting to happen in South Africa. Very little legal action against it, very little consequence. And particularly, anywhere where there's a pocket of money, you find people are registering a business that's got no expertise, no directors, whatever else, getting a juicy tender. This puts the whole of BE under scrutiny because it just becomes a real thorn in the side of people who legitimately do this and have the fees and costs associated with it. So I think the fundamental thing around BE policy is actually to stop BE being used by the corrupt people for their purposes. That would do wonders, but that's a corruption story for the government and the economy as a whole. Other than that, I feel like the government has been very slow to be proactive about the big stuff we know that's coming. So we know that electrification of final energy, the energy transition is a global force that's not going to go away. We know that climate change is a global force that's not going to go away. And I don't have the sense that the DTIC has been very proactive about identifying where we need to be in 5 years' time or 10 years' time as an economy and shifting the policies towards that. They're very reactive and very slow. So maybe that's changing, but the biggest thing we could do with BE is to put the emphasis on incentivizing Black business to be in the high growth, high value pockets of the economy where it needs to be in future to compete, as opposed to the historical stuff. Yeah, that would be my biggest suggestion.
Mm-hmm. And lastly, Gareth, what do you think most people in business or in government get wrong when they talk about BEE ownership?
There's a lot of misconceptions. So at a business level, especially a small business level, there's a perception that you need to find a Black partner who's going to be involved in the business, who's going to bring you deals, who's going to kind of sell. If you think if you're a mom and pop business and you've started this thing and maybe now you're turning 3, 4, 5 million rand a year, that business is probably marginal. You're probably self-employed rather than having a real business. And if you bring, because of a piece of legislation, if you're now forced to bring a Black partner on board, you really want that person to add value to the business. You really want them to be selling for you. You want them to be in the market. And that rankles a lot of people. So what happens is a lot of the people, they have a perception that to do that, you're going to just give away shares. And that, of course, that's a thorn in the side. No one wants to do that because a lot of the smaller businesses don't have the experience or skills that more people with my sort of background, corporate finance, private equity, international strategy consulting have. And this is a whole new world for them. Transferring ownership of any small business is tricky. It's not like you go and buy the shares in an exchange. So it's really hard to do this at a small business level. And I don't think governments really address that in terms of making it easier or providing stuff for them. And then at a big business level, there's just a lot of scrutiny. Deals have got to be very legitimate. They've got to be like you're not going to risk the share price of your thing by doing some dodgy deals. So big business also, and I think this goes back to the narrative. These 100 people, names are public, but I'm not going to go down there. But there's 100 people that have definitely made a whole bunch of money out of owning shares. A lot of those guys got their shares before the BE Act was passed. So these are early deals done in the 90s where people benefited, Black people benefited by owning shares and stuff. That's before the BE Act. The BE Act came out in 2003. So we get this kind of thing that there's 100 Black, very wealthy Black elite that got shares as a result of BE. Actually, they got it before the BE Act was even passed. But subsequent to BE, we see a huge change. I think what's amazing is that we as a private company, as a very small firm with, in a particular focus, we're the ones who did this research. It's astounding to me that government didn't commission it, that they're not making policy decisions based on data. There's a lot of rhetoric. There's a lot of populism. Like we want to have a country that grows. It's a fantastic place to be. We want our children to grow up here, and we want to have a vibrant, prosperous South Africa that's integrated and that's a model for other countries. We've got a long way to go on that.
That was Gareth Ochse speaking to Creamer Media's Polity about BEE ownership.